Okay, so I think we can start. In this session, Jillian Thomas, VP of Marketing, Asset Management and Supply Chain from Future Electronics, and Jan Andersson, Director Electronics Global Sourcing, Scanfil Group, will share their knowledge and insights on this important topic. This is the first webinar of whole series of the online events organized by Etteplan and Scanfil. The upcoming webinars in the series will cover maintaining competitiveness over the product life cycle, building supply chain resiliency, and regulation impacts on product life cycle. So for all webinars, we will send separate invitation, but as you see, each month something will happen. And we organize those webinars together because Scanfil and Etteplan have been strategic partners since 2019, and together we help our customers to develop new products, optimize product cost structure, and extend their product life cycle. So we want to share our knowledge, expertise in designing products for supply chain resilience, as well as navigating the component market. One more technical information for Q&A session. It will be in the end of the webinar. So if you have any question, just write it down into the chat, and after the main presentation, I will read all questions, and Jan and Jillian will answer to them. So, okay, Jillian, so you go first. So stage is yours. You can share your presentation. I will be for all event in the background. Just if you have any needs for technical support, just let me know. All right, so I'm adding the presentation.
Okay, so just checking everybody can hear me loud and clear as well. So thank you very much. I'd just like to start off today by saying thank you very much to Jan and the Scanfil team for inviting me along to give a market update call here today with you. I think Jan's invited me along because myself and my director team for Future Electronics in EMEA, every second month, we do a market update across all the technologies with all the directors and head of departments for each of the business units. So I'm going to be covering everything today. I won't be going into quite as much depth as we do on our webinar because it's a little bit longer. However, we'll be showing contact details at the end of this presentation. If you'd like to join our webinar in the future, or if you'd like to have a bit more in-depth conversation with myself or with any of the team, we are more than willing and very much available to help and support you however we can. For those of you who don't know me, yes, I'm the Vice President for Marketing. It's not traditional Marcom, it's more pricing, quoting for asset management, so all the purchasing for Future and EMEA, the supply chain solutions, so that's what we call our bonded inventory programs, the supplier development program, so I run the supplier development team, and lastly, the customer service team across Europe. So it's a lot of the sort of operational, back-end operational team that we have at Future Electronics in EMEA. I've been at Future for 26 years now. I did previously work for another of my competitors, beginning with A, you can guess which one. Also before that, I started my career at Murata. I'm not technical in any way, so the content of today won't be about product and technology. It's very much a commercial update, more around pricing and availability, etc. So just to give you a background, the main chunk of the data that we'll be showing today, so all the lead time trends, the pricing trends, can also be found on our website. So if you just go into futureelectronics.com and you click on the resources on the right-hand side, you'll be able to get copies of quite a few of the kind of trend Excel data sheets, etc., that I'm going to show during this presentation. What I will say as well is we obviously talk in depth to the suppliers that we have. That doesn't mean that we have all the suppliers in the market. So I can't talk knowledgeably about the suppliers we don't have. But obviously this is just a general market overview, etc. anyway. So how I would frame the majority of the presentation is that the market outlook is looking more stable. We've definitely had a market correction, obviously, since the last market cycle. It is looking stable. It is starting to show some low but steady growth overall. The growth that I'm talking about there is in EMEA. Obviously, if you want to bring in other regions of the world, then the growth rate is going to start getting much stronger based on certain applications and market segments. But for us in EMEA, we're starting to see that slow and steady growth. What we do feel is that customers are very much referring to the lower lead times. And our fear and our worry, along with the suppliers, is that relying on those lower lead times is going to lead to trouble in the future. Reason being is lead times very much are indications from a supplier about delivery schedules. They are not a commitment in any shape or form. And there are some suppliers out there who will tell you when they give you their stated lead time, it is for one MPQ. It isn't for a large volume. So what we risk is the volatility of some significant increases across one or two customers, maybe even direct, that can cause a shift in lead times overnight. And we therefore run the risk of falling short of product. So this is very much a word that's being used throughout the industry from all suppliers, distributors at the moment, is about visibility. We're no longer in the restricted supply chain that we were in the market cycle, where we were locked in on backlog. The flexibility is back, but what we need to do is make sure that the visibility is there. And as I go through some of the presentation, you'll see that that's a key theme of feedback as we go through. So I'm going to start off talking about the commodities. So beginning with the semiconductor commodities and the discretes market. So as a general overview, we are seeing steady growth in the discretes market, for sure. From a future electronics in a EMEA point of view, we're seeing our bookings versus our billings about 10% up. So we can definitely see that the market is coming back, that the inventory has decreased within the customer base. It is still relatively high within the distribution network, within the supplier base, but it has reduced down within the customer base. We're seeing increased quote activity. So as you all know, this becomes the traditional quote season, as we call it, for EMEA. And it started earlier for us this year than previously. So the quoting activity is definitely back, and we are back to looking at annual RFQs at the same level as we did prior to COVID. So, very much back on the annual price negotiation format. So quote activity is very strong. We're also seeing that the pricing trends, although they've been going down, the cost book is remaining steady. In order to get increased costs, it's very much about negotiations with the suppliers in order for them to be able to stimulate the demand. What we do believe now is that those price points have reached a low. It's very clear that they've bottomed out. I don't think even with major significant volumes that we can get much better pricing than we are today. So we do believe that there's no more room to go down on those. We've obviously got the market impact, and I think probably a bit of, we would say in English, the elephant in the room today is going to be around what's been going on with Nexperia over the last couple of weeks. So the geopolitical impact and activities that are going on that are affecting the potential risk and the short term of supply. And where I was talking about previously relying on short lead times, if you don't have a robust supply chain solution, little impacts like this, a geopolitical situation with one supplier, can have a ripple effect, and it can cause some significant issues, not only for customers, but we can see increases in order books starting to come through on their competition, on Nexperia's competition. That impact can make lead times jump significantly and very quickly with those suppliers, and we end up in a spiral. Now, I know there's no clear situation about what's happening with Nexperia today. They have made some official announcements. I think a lot of customers are coming in and asking us exactly which product is impacted. We don't have that details on a part-by-part basis as yet. It's being worked through. We will get more detail. We want to make sure customers don't panic, but we also want to make sure everybody's secured in their supply. And I'm pretty sure my competition are going to be feeling exactly the same way. So priority is going to be making sure that we can service everybody's needs while Nexperia go through this very difficult time. But whether we end up, having to deal with this in the long term, or whether it's a short-term blip, and we will be back to being able to support everybody in the same way, is still unknown. But what it does do is it really does highlight, whether it's a geopolitical situation, whether it's an act of war, whether it's a situation with around the world with the weather. It was only a few weeks ago we were talking about earthquakes and tsunamis, and these things are always there, whether we like it or not. And the only way to get around it is make sure that there is visibility to supply needs and making sure that we've got that long-term order book in place. It's flexible. Right now, the flexibility is absolutely back. So it's about managing the flexibility and managing what's required. But please don't keep it hidden. If you keep it hidden, then there is no planning, and we end up in a situation of having to panic. So yeah, I've touched as well on lead times. Lead times are really only published as a guide. They are not true indication of production and build time. I mean, just generally on a semiconductor, we're talking about 26 weeks. So when you see lead time at around 6 to 8 weeks, this is not a true representation of the time frame in which you may get that product if the order book at that supplier increases for that product. In terms of the general overview for lead times along the discretes and power portfolio, there is some increases, generally more within the power area rather than in the discretes. As you can see there in the bottom right-hand corner, the low voltage MOSFETs, high voltage MOSFETs are showing lead time ranges going anywhere from 8 to 50 weeks. So it is in pockets, and you need to be making sure that you're pipelining your requirements on. Where we've put their SMA when it comes to pricing trends, that's selective market adjustments. So where suppliers are wanting to stimulate demand, where they're prepared to do the negotiations, then that is absolutely where we can get the pricing adjustments. But I have to say, we think we've reached rock bottom, as I mentioned earlier. In terms of passives, one of the key things we need to keep in mind when it comes to passives is we can talk about the market segments within EMEA, we can talk about our automotive market being suppressed, etc. That's not really the driver for the passives market. 72% of the usage of passives is in Asia. So what happens in Asia is absolutely what's going to affect the supply with regards to passives. And although production times are low because there's been an increase in capacity within the passives world, we're affected by the shipping time. Majority of the routes of the passive suppliers are coming via sea freight, and those increased shipping times are absolutely having an impact. As I mentioned, quote season for us, we are seeing a significant increase in our passives activity. And actually for last quarter in Q3, our passives team had a record best quarter ever. So the passives market, although they didn't go through the same allocation that the semiconductors did in the last market cycle, they are most definitely back on track. And as you can see there, the quoting activity for us on our annual quotes. So my quote season was up 60% in September compared to the number of lines that we quoted last year. So one thing I would, bringing in line count and that conversation is there's always a lot of talk with regards to the value of the market. And I think we need to be careful of not missing the fact that prices have been going down, whether you talk about any of the product areas, apart from interconnect and EMEC, which I'll come on to in a minute. The others have seen price reductions. And we've got a different mix of product shipping. So our warehouse, for example, is up on 20% in terms of capacity of product being shipped out. But that's to do with the mix. And it's a lot more of the commodities. It's less of the higher end product. With the higher end product being higher in value, it has that impact when it comes to the overall market value, or when we talk about our point of sale value, etc. So for us, activity is significantly higher than what we would look at as the revenue. And I think everybody needs to also bear that in mind, that when we talk about the market's going to decline 2% or it's going to grow 2%, it's also about the mix of the product, because some product areas are growing significantly faster and the volume of units shipped in order to make that value is much higher than the 2%. Again, visibility for passives is crucial, whether it's about the commodities semiconductors, whether it's about the commodities passives. It really is about having a robust supply chain solution and what we would call designing for resilience. So having more than one supplier on your AVL is key when it comes to any of the commodity areas. I know that's harder on the proprietary, but on the commodity areas, we really need to do that. And again, Nexperia has shown us that that is imperative. It's the same with regards to the passives. Please ensure that you've got multiple AVL if you want to have supply chain resilience. Continued market recovery in the passives. So we are seeing an increased demand in miniaturization driven by the AI data centers with regards to the MLCC growth. And we are expecting there to come a pinch point when it comes to the MLCC market. Excuse me. So we see three key areas of where that migration is going to hit. So from the 0402 22 nanofarad, the 0603 47 nanofarad, 0805 100 nanofarad. That for us is going to be the three crunch areas, key point areas in the next 18 to 24 months where we're going to start to see supply chain issues. As you can see in the top left-hand chart, factory utilization still remains relatively okay and low, but we are expecting that to increase. Where the MLCCs have been designed to replace other types of capacitors, and the next generation of the AI servers is using a lot more MLCC capacitors, we see that as being the impact. Again, it's not coming from the EMEA market, it's coming from the Asia market. But that's where we need to make sure that we have our pipeline on. From a future perspective, we would look to pipeline on our supply chain customers out to the 52 weeks and keep it rolling at that in order to make sure that we're ensuring our customers have continuity of supply. So again, visibility is key. When it comes to interconnect and electromechanical, I think this is the one area where we are seeing price increases. The raw material increases, both gold, silver, and now obviously we're hearing with regards to the restrictions on exports of material by China. This is going to have a real impact again on the interconnect and electromechanical market. We're seeing price increases in general across the board, and we're starting to see lead times going out. Tariffs, we're seeing less impact with regards to the tariffs at the moment. But this really, from an EMEA point of view, is the only product area where we've seen a tariff impact, primarily because of the product going with some suppliers having to go through the US, which has had that impact and caused those challenges for us. Again, we say visibility is key, and please make sure that we've got visibility to make sure that we can have our stock correct, our PBO correct with our suppliers, so our purchase orders on, and manage our supply chain for our customers. Here's a quick overview when it comes to the interconnect and electromechanical. As you can see there, more in the electromechanical, we're seeing those price increases hit, although they are starting to increase now in the interconnect as well. The microcontrollers, microprocessors, FPGAs, again, capacity utilization is averaging around 70% for the mass market. And the weeks of inventory the supply is now starting to come back down. There is a positive book-to-bill for the first time in quite a while when it comes to the microcontrollers. So we're seeing the order book increase. Lead times, so lead times on average 4 to 24 weeks and 12 to 26 weeks for the MPUs, FPGAs on lower quantities. The lead times will start skipping up and increasing as we see that order book coming back from the industrial customer base, which it is slowly starting to do in the EMEA market. The way to price reductions and further price reductions now in this area is absolutely with new technology. With new product being released, that's where we're going to start seeing pricing impact on this area. So driving down costs, I'm afraid, is only really going to come with the redesigns of the new technology. We're definitely seeing the suppliers wanting to price increase the legacy product. And I think that's the trend that we'll see from them over the next year or two. There's no impact when it comes to tariffs from here in this area. And with regards to lead times, relatively stable, apart from a couple of areas for microchip and ST on the 8-bit, and on the MPU when it comes to Nexperia, that's the networking product, and going out to 26 weeks because of the server and the comms investments that's going on. What is really key to say is when it comes to proprietary product, that we can't utilize the rest of our customer base on this product, because you may be the only customer on it. If we don't see your visibility, it makes it very, very difficult for us to forecast. When we've got commodities, we do try and forecast with all customers all together, even though we'll hold your product separate. It allows a bit more buffering if we go through a patchy time in the market. But as we saw in the last market cycle, when it comes to the more proprietary product, it's very difficult for us to predict the needs. And right now, although we believe the market, the inventory has reduced down at customers, it's very difficult to actually know where things sit. And we're seeing an increase in short-term ordering, which we know that we're not going to be able to fulfill. In quarter, purchase orders have increased quite significantly. And unless the stock available at the supplier of the part that you want, it's going to be very difficult to meet your needs. When it comes to analog, so I should have pointed out, this is the split of our business units at Future and EMEA. Otherwise, it might look a little bit strange why we're bucketing analog, memory, sensors and connectivity together. Here, this is very much the key message here is allocation in the memory market. DDR4, LPDDR4, DDR5, LPDDR5, eMMC, these are all product areas that are on allocation today. Pricing is significantly increasing, and we're seeing a large amount of price increases. Also, we know that TE has made a significant amount of price increases within this product area as well. So that's going to set a market trend as well. Suppliers are very much now making sure that product lines are profitable, and they need to be able to see that whatever product they're manufacturing, there is a level of profitability. So in general, we're expecting there to be some significant growth here with regards to the high bandwidth memory. Driven by the AI and machine learning, we know that that's going to 2x the revenue into 35 billion, probably approximately in this year, and then up to 100 billion in 2030. So definitely an area where we need to make sure that we've got the visibility to ensure that we can manage the growth moving forward. And just to give you the lead times with regards to memory, and highlighting yet again the allocation, the NCNR, the significant price increases that are ramping up when it comes to the memory market at the moment. So that was my overview. As I mentioned, these are the contact details of the heads of department within the business units at Future. So if you would like to go into any further detail, I'm more than happy to do so. But in the meantime, I will hand it over to Jan.
Okay, thank you very much, Jill, for this very valuable market update there. I will try to display my screen here. So I hope you see my screen now. Otherwise, please shout there. So as I said, thank you very much, Jill. It was a very interesting update. And as you mentioned here, when it comes to the electronic market, and especially the semiconductor market, we must not forget that it is a cyclic market. It has been for a very long time, and there is no indication that it will change either. So even if we right now have, I would say, quite short lead times, there are some exceptions, of course. As you said, the memory market has which is a little bit more volatile than the other commodities. We know that it is on its way up. It's not dramatic yet, but it is a start. It has already started with the lead time increases, and even some price increases are coming in the second step there. And one thing to bear in mind is it can go rather abrupt, quickly upwards when it is going upwards. Because we have seen lead times that has been so short that even for more advanced high-end semiconductors, it might have been down to 10 weeks and maybe even in some case a few weeks. And that means that there is finished stock out there that is utilized, or there is a die bank stock there so that the products only needs to go through the back-end production, the assembly and testing. And that's how, but when these stocks are depleted, the lead times are going up very quickly to the full production lead time with wafer production and then also the back-end production. So it tends to go not stepwise, it goes in one go to the full production lead time. And that can be for more high ends, we can talk about maybe 5-6 months lead time. So as you also mentioned, Jill, here the key is to, even if we have short lead time for the moment, try to keep the demand visible in the supply chain as long as you can. And we always recommend to display at least 18-month demand in supply chain. And we are of course aware of that it's not easy to predict what do I need in 18 months from now. But it's a forecast that we are requesting, best forecast that you can provide. So in order to show the visibility and make sure there is a pipeline for the products coming in. Another area that we would like to also discuss is, of course, how to be prepared for the future. And this is also to have dual or multi-sourcing strategies. And here we saw, I think that is one of the lessons learned from the tough years here we had when in the cycle, that those that had proactively approved alternative manufacturers in the AML, they were first on getting supply. Because what happens if one manufacturer is starting to get a problem, of course, customers are starting to look at the alternatives, and they tend to look at the same alternatives. So quite quickly that alternative also will get increased lead times. So those that could proactively approve, they were the winners in that situation. So in general, to have that gives better availability. And we should not underestimate, of course, the long-term cost development impact also for having a wider AML. That is, of course, something to also consider. And also, things are popping up. Like you mentioned natural disasters, Jill, like earthquakes, tsunamis, but we also have more factories or factory fires or whatever. Now it's quite a lot of trade conflicts popping up, unpredictable issues. And of course, to have a wider AML will give you options to quickly maneuver in such situations. So this is something that we really promote, and especially to try to get it in from the start. We call it design for availability. There are similar terminologies for that. And it's not only to when designing in the parts, it's not only to look at the technical and functional aspects. Also consider the availability and really carefully select the alternatives. Here we have very much maybe geographical footprint. Today it's looked more and more, of course, of country of origin based upon that tariffs in different countries are looking into that. There is, of course, one exception. China is not maybe looking into the back end production, but instead the front end. But in general, in the world, it's the back end production that gives the country of origin. And so this is something to consider, of course, when selecting the alternatives. We also the back end production location. Also, how does it look? Does the manufacturer have redundancy? Can they switch over to another back-end production location if needed? We can see, I mean, there has been a long ongoing trend that back-end production has been moving out from China, or at least, shall we call it, parallel investments to China. When US, for example, is increasing their tariffs, it doesn't mean that the back-end production is moving to US in general, but a lot is moving to, shall we call it, more free trade countries like Thailand, Malaysia, Vietnam, Philippines. And also, of course, one thing to consider is the wafer sources. We must not forget that very many of the semiconductor brands out there, they don't have any in-house wafer production. They are fabless, as it's called. So of course, when selecting an alternative manufacturer, it is wise to look into what are the wafer sources. So they do not maybe buy from exactly the same source as the other option that you have approved already. So there are quite a lot to consider when selecting the alternatives. So here I think to have alternatives as many as possible, I think is the best first step, but also try to be a bit wise when selecting this. And this is, of course, coming in a little bit more into the coming webinars that in this webinar series with resilience in the supply chain. And also, as we saw during the, shall we say, tough years, 2021, 2022, several companies actually went for parallel designs because it's not always possible to have dual sourcing for the high-end advanced components. So sometimes even parallel designs could be investigated. So this, but as I said, we will come back to these topics in coming workshops. So this was, thank you. This was all we had to present today.